Hi guys, it's Matt Thorpe here with Dick Jacobs, and we are here to discuss the PPP and its forgiveness process. We're at the end of the year now, and it's time to actually buckle down. People are actually starting to get forgiveness for their PPP loans, and it's time to understand how that might impact your financial statements as well as your tax return. So I first would like to discuss how it might impact your financial statements, and Dick's going to talk about how it will impact your tax return from an individual standpoint and also from the corporate standpoint. With the PPP accounting, you have really two options. You have the debt option, which is going to be the more traditional route. Obviously, you accepted a loan when you accepted the PPP. So when you received that money, you would have debited your cash account and credited it your liability account. Once that forgiveness is actually received, whether it's in this year or next year, whatever year it actually is received, you would have an income item for that full amount of forgiveness, and that would be called an extinguishment of debt. The other option is the revenue option. So this option really states that once you meet the criteria to get forgiveness, regardless of whether forgiveness has actually been given or not, you can actually recognize that income as you incur the expenses. So this would make pretty much all the PPP money 2020 event, and there wouldn't be any type of 2021 effect on your financial statements. So we're going to give out some content that kind of goes over those two options in a little more detail. But we just wanted to highlight that there are options for you to choose. It really is up to you as the business owner to make the best choice for how you want to see it. Both are totally acceptable and fine. So Dick's going to talk about how the tax impacts.
Yeah, Matt, the PPP loan forgiveness from a tax standpoint is very much like that great golf shot you hit to the green and a wind came up and it blew it into a trap. Because what happened with the CARES Act, Congress said that the loan forgiveness would not be taxable income. Then the IRS came around and said, well, if it's not taxable income, it's exempt income, and those expenses in relationship to exempt income are not deductible. So in effect, when you get the loan forgiveness, you're going to have to basically pay tax. You're going to lose deductions, and therefore you're going to pay tax on that loan forgiveness. Of course, that won't apply to nonprofits unless they have unrelated business income. And also, there's a little bit different treatment if you're a sole proprietor or a partner in a partnership. In those cases, you may get the loan forgiveness tax-free. So it's kind of good news, bad news, but that's where we are.